Oh boy, did we have a day. Let's get to it. First and foremost, we definitely have a level and we're going to show it over and over again. You can see this crazy bar on the day, the 100, the 22, the 55. Pretty much not what you want to see. When they do these, you really want them to turn green, and you couldn't even get above there on Tuesday. And now you're doing that step down. We're going to call that the AMD two-step. We're going to explain that. And Google, that sure wasn't any picnic. But we have a lot to go over, so let's do it. Now, if you watch the public pre-market live, which we do every morning around 8:15, and I'd strongly recommend that you do that. And also subscribe to the channel, click all notifications. 27% of you that watch these videos don't subscribe, which is bananas considering they come out at different times. And they are all linked together. Let's keep going. So here is the previous close from Friday. And then what do we have here from that Friday? It's just get me out, right? Get out, get out, get out, get out. It's that Amityville horror level. You say it over and over and over. You've got 1, 2, 3, 4 Matumbos in a row, all at the same level. When someone keeps knocking on that door, eventually you're not going to like what happens. And people that were long are not enjoying this. Now, what I will say is that if you can see these undercuts right here over and over again, you still are not breaking that level. So we're still trying to defend that 55. On this is a 55, a 22, and 100. You should use what you're comfortable with. Now we have that top of the H, and that seems like a dream at this point. But that election day level still holding, and then we have Itchy's FOMC speech ends here in the October 24 PPI level. And I do find that interesting. I have 3 developments tonight that I thought they're concerning. I'll leave it at that. And they leave questions open, so I'm always interested in your comments. I'll say it that way. I'm interested in your comments on these 3 topics, and we'll get through it. But watch this election day level if we get down there tomorrow. But the earnings really didn't do us any favors. It was the secondary names tonight, which we'll get into. But watch these levels tomorrow, and you can screenshot that. Now the NASDAQ. And I think this is important because there's that Friday level. And you see the difference here between Friday's level on the NASDAQ and what you're seeing here on the ES? You see how we're holding that level on the NASDAQ and we weren't before? Remember when the NASDAQ was falling and the ES was leading? We're starting to see that rotation back. It's really important to get that. And what we're seeing here is Itchy's FOMC level. We went through this again pre-market, and I'm going to just drop it here for a second. We're going to go into this hourly, and I just want to show you these VWAPs and these pain points. So if you use a VWAP, you always have to be careful with VWAP because you can VWAP literally all over yourself and draw 20 of them and say, see, I told you. So I always look for pain points, which are areas where you reverse. Like here, that top of the H, see how you're at that level. You have the all-time high up here, and then you have our November election. Well, all that ties right in with the 55 here, the 22, Itchy's FOMC meeting, and the December 18th, that December 18th meeting. So I have huge places of convergence in here. Like there's 7 or 8 of them. It's insane. And so what you're doing is you're just looking and saying, okay, well, which ones are really holding and which ones do we have to pay attention to, right? And then you can see which one you're respecting. So you're really respecting the top of the H here. And that's really what you want to pay attention to, right? So you're like, oh, okay, that top of the H one, like that's the cat's pajamas right now. That's where I need to focus on it. We got Matumboed here. And then we flipped from what? Say it with me. From resistance to support, right? So we're always looking for that test of that resistance to flip it to support, a little bitty retest there, and then a major retest in that area. So then this becomes an area of support that we do not want to get below. I do not want to be below this area, this 21.5. That's a problem. Now, does AMD get us there? Does Google get us there? They're pretty much bloodbaths tonight. Anybody watching this is going to probably know that, but we're going to touch base on that so that you have a good view of that tomorrow and what to do. But we triggered something today that I really don't like to trigger, and we need to talk about it. In front of you is the S&P breadth. And why I don't like to talk about it is because I really just don't want it to happen, but here it is, so we have to talk about it. And we can see up here you have the 200, the 50, the 20, and the 5. And so by order, right, it's just 200, 50, 20, and 5. Now, what down here, obviously, is the 5, then the 20, and the 50, and the 200. I'm making it clear here because people have asked about that. I mean, you could rewind the video, but there you are. And so what happened today is that you have broken here on the 50-day, and you are now below 50 again. That is an intermediate sell signal to institutions. They look at this. So you might see a little bit of risk off here tomorrow, depending upon how this holds. Now, the good news about this, if there is any, is that the 5-day is already down to around the 35 or a 36, but this is definitely something that we have to pay attention to. This means that they're leaning on the market a little bit. And we saw that today with the financial names. Some of those financial names got smoked today. And we have to pay attention to that, especially on the mergers and acquisition side. But I do think that you want to note this. Please pay attention to this. It's really important that this gets back over 50. Now, I do think we should take a minute and just talk about the 10-year and what's going on here. You can see, obviously, this DTL downward trend line. And as yield goes higher, the bonds sell off. And what are we doing? We're rallying, and we're trying to break that 450 level. We are seeing them buy bonds, and I think it's something we have to pay attention to. We are at that 55. Does this hold? Does it not? Just to be really clear about this, we kept hearing about inflation. If you go and take a look from the inauguration on, all they've done is buy bonds. So what I always try to tell people to do is look at what they're doing, not what they're saying. They're buying bonds. And they've been buying bonds ever since the inauguration. And you have to ask yourself why they would do that if what he's going to do is going to be inflationary. It makes very little sense. Instead of you're going to say, oh, well, we knew back here and therefore it's X, Y, and Z. Well, even that doesn't make sense because it's from December 18th, you're right back to that level where Itchy had his special speech. And then, you had Mary Daly had to come out and save him and start doing a press circuit because it was an absolute dumpster fire floating down the river with a bunch of raccoons. But we'll get to that. That award goes to AMD tonight, in case anybody's wondering. But here we just have to watch what happens. Let's take a look at the dollar and see how the dollar did today. I think that's pretty important as well. You can see the huge move up and the failure and then the undercut. So dollar's getting a little sleepy up here as well. And I'm sure you guys already saw this pattern of really the left shoulder head, right shoulder development, pretty much the neckline right here. I keep waiting for the industrials to catch. They're not, which is kind of interesting because manufacturing's up, and we should probably talk about that at another time, but there's too much to cover tonight. So let's get into it. Now, there's a couple of things I'm going to go over here, and they might be a little unpopular, but I'm starting to have some concerns here, and I'm starting to see some patterns that I saw previously when we formed tops on Bitcoin. And I'm not really sure the Boomer Crypto Conference is going to really help them today. They might as well had me up there trying to work on their internets. Just really did not go over very well, but you might start seeing some of the steam come out of this. So we have the doji here, and then we've been sitting here holding that 90, retest, and then we have the recent retest, the bounce, and now you're seeing weakness, and now we see this peak. So you see the peak right here, overlay the RSI, and this is where it gets somewhat concerning. So if I take a look at this RSI, and we just do the simplest of things, let's get rid of that little thing before it drives me crazy. And we do the simplest of things, and we just take a little DTL line, and we would draw right here, and then we'd go and say, okay, well, how is that going to work? Well, you're right here, so even if we just say that's a wick, and we still made the higher high, you would still go out there and say that's a divergence, and you would see the peak from here, and you would see the divergence in the rounding. Now, the thing about RSI that a lot of people get confused by is they just say, oh, it's a divergence, therefore it has to happen. No, these take time. If you ever looked at how RSI is calculated, and there's a really good book on this, I should actually cover it in a couple of videos, but if you ever really understood how RSI is calculated, it's determining the magnitude of the move, and that's what you have to understand. So that's why when you see like these lower lows like here, and then all of a sudden it's going higher, it's telling you that the magnitude is going to pick up in relative to where the stock is. So if the magnitude is here and it's telling you that the magnitude is going to pick down or slow down from where it is, then that's what's going to happen, right? Once you understand what these things are, guys, it makes your life so much easier instead of just saying, oh, look at this, right? That's what people say. Anyway, so if we start looking at some of this stuff, you're going to notice that you're going to see some of the same patterns here that you had here. And I'll just point them out, and then we can kind of go from there. And I'm always interested in people's opinions on this, so please comment on it. And I get it. People are like, well, you didn't have ETFs back then. You're right, you didn't. So when the outflows come, you don't think it's going to be worse if the outflows come. But you can see here as well, and then people are like, well, we broke down, but it's really not that bad. And then we just went on an absolute suck salad ride for about a year, right? And then you kind of look here and you see the same thing again. And so you would go, oh, well, that's okay because we were fine from February to March to April. And then you see how this is happening. And then you'd go, okay. And I don't get into, I guess we could use that one too, why not? But, it takes months. It's not going to happen on Tuesday because some guy puts out, oh, look, divergence. But understand that the integrity of the move is just eroding. That's what you need to take from this. And it's not just there, but wait, there's more. If you go back through some of these other moves, even before the pandemic, when the market was open, and yes, there actually was a market before the pandemic, and you look at some of these levels in here, from even 18, and you can see them, and you can see the rallies in here, and then the drops. It's everywhere. So when I start to see these kinds of patterns, I pay attention to them. Again, this rallied, failed, and then fell apart. But that's when the futures market came in and people could actually short Bitcoin, and that's why they did there. And then it is what it is. But I do see some cracks here, and I'm not sure what's going to be your next motivating thing. Matter of fact, I see an issue with MicroStrategies. I was kind of surprised that he did this. Now, I don't get into the whole, and what do I think here? I think that you have the potential to come down. To where? I mean, it really seems like it's inevitable that you're going to test 72. The idea that people don't think you're going to have another 80% correction in the same thing that's had several 80% corrections is kind of ridiculous, right? I mean, it's like eating something and then saying, oh, that gave me heartburn, but I'm going to eat it again, and I'm sure it's not going to give me heartburn this time. But anyway, see how you're sitting right here, 72,000? I don't know how you don't come back and test that level. Now, I had some trade reviews I really wanted to go through tonight, but I think this is more important. If we take a look at MSTR, and I just want to throw this out there, I currently have a short position I'm starting here. I'm a little troubled by their recent preferred, and if anybody wants to comment on this, I always know the Forbes curse, or Fortune magazine, you're on the cover, it's only a matter of time. Maybe, I don't know. I mean, Forbes has been around for what? Or Fortune and Forbes, whichever one he's on, Sailor's on, he's on one of them. There he is, he's on Forbes. So the idea, because he's on the cover of Forbes, and it's the Forbes curse, it's really silly. I'll explain why. Forbes started 1917. You have 12 issues every month or every year. And let's just say that, it's only the first of the year, that one. Okay, so out of 100, every single one of those people had a problem? Every single one? Like, it's just silly, right? I mean, it's a great talking point. It makes people like giggle and go, oh, it's going to have a problem because he's on the cover. But it's just really stupid when you think about a magazine that's been around for 100 years and has 12 issues. And then all of a sudden, the reason a company's going to lose billions of dollars is going on the cover. It's like the Madden cover. It's the same thing. It's a bunch of... So I think the larger issue for me is this, with this preferred that they issued. I think that might be a real problem for them, and I'll show you what I mean. So if we take a look here, this is the filing, and the filing is for this secondary, but they're not calling it a secondary. They're calling it a perpetual strike preferred for $80 a share, and they're going to raise $500 million. Here's my problem with this. They're going to offer 7.3 million shares of an 8% series. So they're doing a preferred stock. So to have to go and borrow money now, they have to pay 8%. Now, here's my problem with this. And I keep reading it over and over again just because of the language. Shares of 8% Series A. So if they're paying 8% for this, the last round was 0 on the convert side. Now, what they're doing here is that on the convert, there's another term in here where they might not be able to convert till it's back, or it's at 1,000, and then it becomes perpetual. I'm not going to go through the whole filing. If you could borrow money at 0, why are you borrowing money at 8%? All right, so what I think happened here is the last convert that they did is underwater, meaning the people that bought that convertible have now lost money. Now, what they're doing is they're hedging against that, and we've gone through this a little bit. What they do is they buy the convert, which acts as a call, and then what they're doing from that call, which has an implied value, is then they're shorting stock against it, right? And what they're doing is they're just booking the spread of that, and they can just keep the call there, stock trades up, and then they want to short it, they just keep doing it, and that gives them exposure to Bitcoin, and they can hedge their risk however they want through that mechanism. So the convert's acting as a call to them. Now, if I get into the point where I have a perpetual preferred that now has this value out there, and they have the right to call it, and I get all that, but now you have to pay a dividend of 8%. Why would you do that if your last round was at 0? I think this is because the convert, and I think that convert, the fact that that convert's now underwater, that people are saying we want to yield. This changes his model. This in and of itself becomes more of an issue. It might still work, and it might still work on the money side. He might be like 8% for me to go and buy Bitcoin. I'll do that all day long. But that's a different game, because now you have to pay a dividend. And so as long as you have to pay a dividend, you have a problem, unless you have the cash flow. And he's constantly writing things down. And so if you can only eat up the cash flow so much. Bitcoin doesn't cash flow. So I'm really curious about this. I'm curious for the explanation of it. And we'll go from there. But I think if I had to say where do I see an issue, I think the issue's here. I think he's going to explain this on the conference call. And if I own this and I bought this, the very first thing I would do is short the stock, because really all you're doing is just locking in the difference. It's the same thing as a call option, and then you're long the preferred getting 8%, and while you're short the stock, right, is betting that the stock's going to go down, you're getting 8%, and at the same time you have a covered call up here in a collar. So you can't really, you're not going to lose infinite money shorting it. So I'm not really sure why this was done the way that it was done. The only thing that I can think about is that his current structure, where he was doing 0, and the fact that those are underwater, is no longer working. This would make sense why it didn't move the way that I thought it would today when they had the crypto bros out there. We got right to that 5 or 353 and rejected over and over again. It's the same level. It's complete Matumbo. I mean, you guys see it as well. So if you're looking to get involved, just make sure you're getting through that 5 or that 353. And then if you are, okay, give it a shot. But I think you have an issue here. I think you have more of an issue, and I think he's going to have to explain it on the call as to why he did it. Maybe one of the people that took $1 billion of the last convert asked for a dividend because of their board. I don't know, but I'd really like to hear that explanation. I want to go through some of these highlights for you here. This is just an article out of Benzinga, just easy to grab. But if we look here, the estimates and the beating of the revenue number, you have to take this into account. Really what they're looking for is data. The data center numbers, which were way off, and they missed. They're saying it's up 3.9, but for the guidance, they were way off on the guidance on where they were supposed to be. Gaming revenue fell off a cliff, but I think people expected that. And the idea that we always want to wait for the conference call for the explanation. But if you take a look here, what you're saying is beating analyst estimates of 573. Well, what are you expecting next quarter? So approximately 7.1 plus or minus 300 million. So we have sequential decline year over, or month over month, or quarter over quarter rather. Apologies, it's been a long day. But it's not what you want to see at all out of a company, and there's a little more data in this one. So gross margins were off. The sequential decline of 7% is not what you want to see. I think there were some real issues here, and I'll tell you where the issues really were. On the R&D side, they spent way more than they thought, and then you also have their gross margins coming in a little bit lighter than expected, and their data centers missed big time. So I'm not going to spend a lot of time on it. We can always do these on Saturday and get really in depth if you want. If I had to just give you the highlights on why this is in trouble, right? You have data center growth down where it's supposed to be. Revenue for next quarter sequential down. Gross margins down. Right? That in and of itself. Oh, by the way, R&D spending's through the roof. Now, I'm going to say something. The fact that R&D's up is good because it means that she knows she has an issue with her products, and eventually they'll ramp up. When AMD went after Intel, they ramped up their R&D massively, and then they overtook Intel. They're going to have to do the same thing. It's just going to take several quarters. Now, from a stocks perspective overnight, and we're doing more micro tonight, as you can see, I shorted it. I did fairly well with it. At the time of recording this, I still have a short position on. I'm going to see how it closes and goes from there. But I think it's in a lot of trouble, guys. I've been saying this for some time. It cannot compete. You're seeing them go into the AVGOs of the world. You see AVGO running after hours. There's a reason for that, and it's because Google increased their CapEx drastically. And then you're seeing NVIDIA as well. NVIDIA trades on AMD, which is just so silly. It's like Snap, for whatever reason, which also had an okay quarter, tends to move Meta. Go figure. It is what it is. But if I was to look at AMD and say, where can this get to? I think you're heading to the double digits. I mean, I think that's where this is going. This was not a great night for this space at all. And usually when this comes in, you'll see NVIDIA come in as well, which again, makes no sense, but it is what it is. Where can you head to? It looks like 92.81 back to this breakout levels where we're heading. Companies like this, when they start having declining sequential growth, it's not really where you want to be. It's not the cat's pajamas. It's actually whatever the opposite of the cat's pajamas is what it is. So I think that's a dumpster fire floating down the river with a bunch of raccoons. Now, why is Google down? Google's crushing it on a lot of places, but the revenue's missed. So what is the issue and why do you care? You care because they missed on the cloud side, and that's not where you want to miss. I can sum up why Google's down in one graph. Now, obviously, this is not mine. This is actually from Beth, and you can go look her up and just look up IO Fund. I like the data she puts out. It's very clear, just to the point. This is it in a nutshell. You see the 35, how we started having sequential growth over and over in the cloud, revenue growth. All of a sudden, you went from 35 to 30. This is pretty much the exact thing, similar Let's call it that, because people say, well, it's not exact. Yeah, it's not. Similar to what happened to Microsoft, right? So they're not winning. Meta's winning. If you're trying to figure out who's winning through all this AI and all this spending right now, it's Meta. It's open source. It's very clear that Meta is winning this battle. We'll see what Amazon has to say. But right now, cloud revenue growth is down. But at the same time, they increased CapEx. Now, that's kind of interesting, right? So while I fully expect Google to get smoked tomorrow, and we'll see how that trades, people will buy that dip, obviously, because it's Google, but I don't know that I would be doing that. I don't want to buy the losers. I don't really understand that. It never really made sense to me. I've been doing this 25 years. Why would I buy the ones that are blowing up because they're getting their butts kicked by the winner? Why wouldn't you just buy the winner? Like, it just seems to be... It makes so much sense to just buy the one that's winning versus the ones that are, they're cheap. Okay, it doesn't make any sense to me. I'll leave it at that. Go for it if that's what you want to do. But here's what's interesting. The CapEx increase is taking AVGO up about $8. And it actually had NVIDIA up at one point tonight, which is nice. And you rarely see that when AMD does what it does best, which is just, blow up. So that's it.